George Joseph, the Chief Investment Officer and CEO of ASK Investment Managers, is joining us. George, good morning. Thank you for joining in. Happy New Year to you, your family and your team as well. Talking about these renewable energy players, right, and as Mangalam was also highlighting the new entrants in the FNO space, but there have been concerns with regards to overcapacity, and there have been some circulars issued as well. Do you have any exposure to this renewable energy theme? If so, what are you playing it through? Playing it through these names or through the financiers?
Good morning and Happy New Year to you and your family as well. It's wonderful having me here. The point you're highlighting on renewable energies, specifically, we don't have exposure. We think that is an overcrowded space, and the valuations doesn't seem to be in sync with the fundamentals. So we are quite away from that.
Hi, George. This upside you're expecting as we move into 2026, on the broader markets, given what we're seeing over the weekend, U.S. striking Venezuela, generally the rise of geopolitical tensions all over continuing as we step into 2026 as well. Do you think that could, to some extent, cap the upside as far as the valuations are concerned?
Yeah, it's an interesting time. If you look at the way globally, things are not in a very good shape, especially from a US point of view. The valuation momentum divergence, which we can see very clearly at this point in time. Earnings growth is focused on only few mega caps, while broader market breadth is deteriorating. And bond yields would have peaked out, but unlikely to collapse. So when we see from the valuation expansion perspective from here on, it looks very difficult from a global standpoint, and China remaining weak and Europe range bound and liquidity is no longer a story or a tailwind. So what we believe at ASK is, the world is moving from a liquidity driven market to a more of a cash flow driven market. So we need to be more careful about what you buy and, the resilient businesses which you need to onboard. That is the theme what we are clear on. And when we look at from that lens, we see earnings rebound very clearly in India. India can be in, one of the bright spots in the world, especially from the large markets perspective. And India still remains the structural growth story among the large economies. But the returns from here on will be very moderate. We have to be very, very selective. And, you look for good domestic resilient stories, capex cycle stories, consumption-driven, consumer discretionary stories. Liquidity is not going to be abundant. So businesses which has been beneficiaries of liquidity, but not of fundamentals, will start tumbling down. So that is our broad view. But, mid-teens growth is visible, and that's a consensus estimates for FY27 and probably towards FY28 as well. But FY26, between 7 to 12% range, the earnings growth has been. So we think broad index will give similar kind of range in FY27 and 28. Some inch up in the earnings growth in the broader markets. But the valuations also needs to be taken into consideration. So valuations is about normal.
Drill that down for us, George. You mentioned a few sectors, but in this broad gamut of themes that you mentioned, where specifically are you betting on for the consumption-driven themes and so on?
No, what we are betting very clearly is on the private financials. Some of the large cap private financials are, to us, it looks like a dirt cheap valuation. Maybe at 5-year low valuations, it is available, which looks very attractive from a next 3 to 5 year perspective. Entire private financial space looks very interesting. So last 5 years, if you look back, it was more of a recovery theme. And, PSU banks and some of the large private banks who had a lot of NPA, they were the biggest beneficiaries. But next 3 to 5 years, we think more of a credit growth play. And, that's where some of the private financials will look good. And also, we are quite bullish on the NBFC space. where you see the MFI problems, coming off, and MSME, SME problems coming off. So there is a good tailwind for growth, and as well as the benefits of the rate cuts also clearly going to come through for these companies. So NBFCs, private financials, that's a space we are quite bullish on, and looks attractive as well. But otherwise, most of the sectors are fairly valued or overvalued. So we need to be picking and choosing the right ones in these other sectors.
Pleasure having you today, George. Thank you so much for sparing time and joining us today with your views on the markets and the themes that you're betting on as well.